at a certain point, there's a limit to how much you can put into either the SEP or the 401k. And if you're just making enough money that you can't get the added efficiency of the 401k, it may not be worth the extra headache.
So it can cost like up to $2,000 to register an LLC in New York State.
Oh my, I had no idea.
Yeah.
Holy smokes. There is a social safety net out there for people that have not planned well for retirement. That's supposed to be, by original design, about a third of your retirement income need, and that is Social Security.
Information presented on this program is believed to be factual and up to date, but we do not guarantee its accuracy, and it should not be regarded as complete analysis of the subjects discussed. Discussions and answers to questions do not involve the rendering of personalized investment advice, but are limited to the dissemination of general information. A professional advisor should be consulted before implementing any of the options presented. Encompass More Asset Management LLC is a registered investment advisor with the U.S. Securities and Exchange Commission and only transacts business in states where it is properly registered or is excluded or exempted from registration requirements.
All right. Hey, everyone. Welcome back to another episode. Today, I am joined by a friend of mine, Igor, from out in Brooklyn, New York. Excited for this conversation. Igor is actually a self kind of identifies here as a creative, which is the polar opposite of myself. I am not somebody very artistic in nature and kind of have bad design, artistically speaking. Igor is all about it. He comes from a background, professional photography, digital design, had a design studio and worked a multi-decade career doing that until recently when he went through the certified financial planning program and launched his own business as a advice only certified financial planner. Meaning the engagements that he does with clients, he doesn't do anything with portfolio management or anything along those lines, just does the planning side for people. And just does it, you pay him for his time. It's definitely an interesting business model. And the thing that interests me about Igor and having this conversation is he thought that there's a gap with creatives and they tend to do a lot of freelance work and be self-employed. And there was a lot of gaps in their financial planning. As we talked, I think a lot of the things that he identified as gaps were actually gaps that I feel like I've identified in general. And actually a lot of the just independent contractor community, we tend to have a lot here in Southern Utah. And I think it's relatively similar across the landscape. And it's just some of the challenges that come with, again, being self-employed or being that freelancer, independent contractor. Hey, HR doesn't set up the 401k for you. They don't set up the health insurance, right? The paychecks aren't, on the 1st and the 15th every month, same amount. Life's just not as predictable the same way. I think that's what people love about it sometimes, but it can cause a challenging financial situation if you're not keyed in. So, Igor, if you don't mind, I want to hop right in with you. And you kind of identified 4 areas that you really try to zoom in on or focus in on with people to get their finances moving in the right direction. Tell us about the first one.
Hey, Brandon. Thanks for inviting me. It's a pleasure to be here. I've noticed, and I've been there myself, that I guess maybe it's that stereotype, left brain versus right brain, structured brain versus creative brain, and where I see that a lot of creative professionals stumble and don't know what to do. And of course, one of the first things that comes to mind is this irregular income that you mentioned. You don't get a paycheck regularly. It's a big challenge, and it's very it's a challenge in a way that people don't think about it, but there is a way to address it. You just need to have some planning in place, pre-planning in place, and be flexible. So
what's the methodology? What's your approach to helping people get the clarity that they need around the, managing those unpredictable income, right? Fluctuations. Is it a larger emergency reserve? Is it a certain budgeting style or system? What do you think it is that works for people, particularly creatives?
Sure. You are absolutely correct. Budgeting, even though I'm not a big fan of budgeting per se, I think if you run a business, you must know your expenses and you must know how much money you need going forward. And then similarly to personal finance, having an emergency fund and having a backup plan is very important. And probably usually it's recommended to have 3 to 6 months, but sometimes it might make sense even a little more. Also, in terms of other approaches, I think what's really helpful is to make sure your personal finances are separate from your business finances, because a lot of creatives don't realize that that's what needs to happen.
Yeah.
And yeah, so and as far as the systems, I think a great system, I don't know if you're familiar, called Profit First, or at
Very
least
familiar.
variation of it.
Yeah.
Yeah, I
Wonderful,
think
wonderful book.
Yeah, and I think it works great, and it doesn't have to get that complex, but at least having some sort of a separation and creating a separate bank account to have your profits stored, and to have your taxes taken care of, and to have your salary taken care of is highly beneficial.
You know, I think the thing about Profit First that's eye-opening to so many people is so often when people become freelancers or, are working independently, they're self-employed, it's easy to think, well, I was making 100,000 at, my salary job. So now I'm making 120,000 because I left that. I'm self-employed now. So I'm like doing way better.
Mhm.
And the truth of it is you're probably not. You're probably actually making quite a bit less. And the reason why is you have to think through all the functions, right? So you have to pay for all your own employee benefits, right? You
Yeah.
also now have to fund your own 401k, right? You have to do the profit sharing for your own retirement plan. You have to build that safety net for yourself, right? You have to pay all your payroll taxes, your Social Security tax, FICA,
Yeah.
your FICA, your Medicare, and those things can add up quite significantly. And before you realize it, you're like, yeah, that's quite a bit. I think Profit First takes it even a step further and helps you understand that, hey, if you're going to own a business, like the point of owning a business is for it to be profitable and deliver you
Mhm.
profits in some regard. So you can work in the business and you can own the business. If you're working in the business, you might as well just be an employee somewhere, right? It's really no different. But a business owner receives additional profits. And so Profit First does a good job at helping somebody understand, okay, how do I set money aside for myself to pay myself and live off of? And that's my salary. And then there's this additional profitability that I'm going to force the business to have so that I can get my return for my own future as a business owner. It's a wonderful book, and I highly encourage people to read it. I think the book does a really good job at a certain point of overcomplicating it. I don't think it needs to be quite as complex as they make it in the book, but if you make a book 15 pages, you don't sell enough copies, right?
Yeah.
So they had to add some more pages. But I actually personally use the Profit First model for myself, and it's wonderful. I actually always really enjoy coaching people through that and setting it up.
Yeah, and the author talks about having 7 accounts, but I think that might be an overkill. Starting with 2, 3 would be sufficient.
Yeah, I mean, you got to handle something that has your, what you're able to track mentally, sort of. I mean, obviously not mentally, but the mental map of it. Whether you actually make an actual mental map in Canva, a mind map of your account flows, or you just sort of remember it. I know using nicknaming really helps a lot for me on accounts. But I've got the accounts that I personally use actually are my operating expense account, my profit, my owner's compensation account, my taxes where I save, money for taxes, and then a charitable giving for future charitable causes. Right. And so it's not too complex, right? But having a plan, it does make it easy, right? You get some income coming in. Myself, I built a little spreadsheet. So you put in the number, what you got in it, kind of spits it through the matrix and tells you what to transfer where. And there's some rules-based systematic approaches all of a sudden to personal finances. And it is helpful. I think that can really help people build that. One of the things that you mentioned was that 3 to 6 months for an emergency reserve. What's been your approach? Because you hear this a lot, and Dave Ramsey says it. The big names all say it. People generally already know it as a guideline, right? If you say how much you think you should have as emergency reserves, they usually say something like, I don't know, 3 to 6 months, right? They kind of people understand that. But 3 to 6 months of what? Is it 3 to 6 months of gross income? Is it 3 to 6 months of business expenses? 3 to 6 months of business expenses plus owner's compensation? Is it 3 months of owner's compensation, or like what you need to pay yourself on the personal side? How the heck does somebody really calculate that out? What are the 3 to 6 months of what?
It's 3 to 6 months of everything, and you need to. And again, things fluctuate all the time, so you probably need to track it over a period of time, maybe a year, and just average it out.
Yeah.
Yeah, that's why I say 3 to 6 months is a good idea. But if you could do more, just to sleep at night safely and not to worry about it, I prefer that.
More months is more conservative, right? That's the approach. I try to remind people that when we're building their portfolios, one of the things I look at is hey, you don't need to necessarily on your long-term portfolio say you're more conservative if where you're more conservative is in your financial planning, right? So all else being equal, if you've got more emergency reserve, you can take maybe more risk in your, long-term IRA, right? You don't have to say, well, like you got to look at the whole picture, right? One of the things that I've noticed from my end in working with people is sometimes I'll work with people that own, say, like a construction company, and they have this huge cost of goods sold, or a online business that has a lot of inventory turnover, or something along those lines. Sometimes if you look at just gross revenue in those businesses, the number for emergency reserve can get unreasonably big really quick. But it's because they have kind of revenue minus their cost of goods sold, and then that gives them your gross profit. And so what I tend to help people try to focus in on is, hey, the gross profit piece, right? Because if all of a sudden you're not doing any business, you also don't have the cost of goods sold component, right? So focus in on that. 3 to 6 months. I love it. What do you think the play in is on that when you're talking about setting up accounts and having business and personal finance be separate with regard to entity structure? Because there's all these bad videos out there from tax people saying like, you can save thousands on taxes by starting an LLC. And I'm like, what the heck?
Easy peasy.
Man, I don't know what they're smoking, but it's gotta be strong, What's the deal with that? And how does somebody kind of know what to do if they're navigating that landscape, right?
Yeah. So, of course, you need to be conscious of when to go to the trouble of setting up your business. It's always a good idea, even when you're freelancing and you have your own, like doing sole proprietorship. Still, it makes total sense to separate your expenses and business expenses, and it can be as simple as just having another credit card that only business expenses are charged to, and having a checking account that all the money comes into. But at some point, it can get a little bit more complex, and it does become beneficial to have your own business structured and established. And you really need, like, for example, when you file taxes as S-Corp, you really need to be able to pay yourself a reasonable salary, whatever that means, but it has to be a reasonable salary. And so probably if you don't make, your revenue is less than 60,000 a year, probably it's not worth the effort and the expense, because it does get a little bit more expensive even to file taxes when you have a corporation.
Yeah, if you set up an S-Corp, there is additional, you have to file a tax form 1120S. Your accountant is going to want to charge you. It's a whole different tax return for your business. And the thing that you're highlighting is paying, compensating yourself, but not just compensating yourself in letting profits flow through and paying some self-employment tax, but in running an actual payroll. And without getting too far into the weeds on that, we're just highlighting there's some additional administrative costs. I know, and it can vary from state to state. I know in Utah, there's some additional expenses you have to pay around the workman's comp fund type stuff. I believe it is. That is in addition to what you would just pay for self-employment tax if you were all on Schedule C as a sole proprietor. And so be a little cautious around S-Corp, but there certainly is a break point where it tends to make sense from a math perspective. Obviously, talk to your CPA, talk to your business attorney, and see if the rest of the implications of that make sense for you. But from a just tax perspective, it's that. One of the other things that I remind people is, there's a difference between setting up your entity structure and setting up your tax structure. Have you seen this where people say like, well, you got to make an LLC and then you're in business. Or they say, well, you have to be an S-Corp. And it's like, well, you can be an LLC taxed as an S-Corp is typically what it is, but you can be an LLC just taxed as a sole proprietor. So you can have that, if you're, Joe's food truck LLC, you know what I mean? It can go to your Schedule C, and it will say the little business's name on your Schedule C of your personal tax return, and you pay some self-employment taxes there, and you can do that. It's what the IRS calls a disregarded entity, right? And what that simply means is there's no taxation happening at that entity level. It's not going to be required or to assess for taxes in any way. And as you grow, you can convert those, you can take that LLC you have and you're operating as a sole proprietor and elect to do an S-Corp taxation, filing it on the future. So I generally recommend people really consider their options. And one of those options sometimes is keeping things simple for yourself, right? And just get something like an LLC if that's what your accountant and attorney think are just the more prudent things to do, and then allow yourself to grow into more complexity as needed.
Yeah. And the biggest benefit, one of the biggest benefits of setting up a business entity as opposed to being a sole proprietor is liability protection, of course. So that's important. But again, if you're not making enough money, if your business is not producing enough money yet, probably it's not worth the effort.
Yeah. But certainly if you want to do business under a certain name, you can file the LLC, you can register a DBA or doing business as under your own name too. So there's options. What about
funny thing in New York? I don't know if you've heard of it. They still have this antiquated rule where when you register an LLC, you have to make an announcement in a newspaper.
Oh, really?
And of course, the newspapers are really taking advantage of this rule. So it can cost like up to $2,000 to register an LLC in New York State.
Oh my! I had no idea.
Yeah.
Holy smokes! That's a huge difference. I mean, listen, we're in Utah. I think if you in Utah, let's see. So I've registered all kinds of entities for myself for the years. So you get on the IRS.gov website, you get your EIN. That takes like 5 minutes. And then you go over to the state website and you register with the state. I want to say it's like $15 maybe.
Yeah. A friend of mine in Michigan said that it's in Michigan, it's like $25. You can do it every day.
Yeah. $2,000. That is probably, yeah. I have been wondering how newspapers have stayed alive, and you've answered the question. So thank you. Satisfies my curiosity. Wow. Hey, thanks again for following along with us on the Ducharme Wealth Management Podcast. We really genuinely appreciate your support in the project. Please, if you haven't, subscribe real quick. It does help a lot. And if you have questions, you want us to take a look at your own situation, you want us to take a look at an investment statement, you want to run some advice you're getting somewhere else, just pass another party for a second opinion, you're trying to dial in your retirement plan, whatever it may be, please reach out to us. We are always happy to do consultations for our listeners. You can find us at ducharmewealth.com. From there, you can schedule appointments with advisors that you think you would like to work with, including myself. or Carissa in St. George, and we can help clients again across the country, pretty much all 50 states. So please don't hesitate to reach out. We'd love to see if we're a good fit and can add value to your financial life. DucharmeWealth.com, and we will see you out there. Enjoy the rest of the show. I think the other big thing that I see in that you called out is the health insurance thing, right?
Yeah. Oh yeah, that's that's a Wild West right there.
Yeah. And, and I don't care to get into the philosophical side of health insurance and whether it's, productive or not, or good for society or not, any of that. But just simply put, people generally have a concern about their health and how they would pay for health related things from a financial perspective. And so that's our job to address that. And what are people's more common options that they have?
Yeah, it becomes pretty complex in terms of what's available other than what's known as marketplace. The marketplace is great and it's easily accessible for everybody. And you can get, if your income is low enough, you can get subsidies, and you can always register for a plan. There's no medical forms to fill out, so you are eligible. The downsides to using those plans is that you are only covered in the state you're in, so it's not a nationwide network, and the coverage can be relatively poor. So you don't get to select the doctors, all the doctors that you want. You would be limited. It's more of an HMO style system.
So it's an interesting perspective. In Utah, I feel that the marketplace is generally pretty good, and you can get some really good insurance through there with, reasonable max out of pocket limits. The struggle that I have found is when people make fairly good money, and all of a sudden you don't qualify for the subsidies. You don't get the really cheap insurance through I don't even know that I want to use the word cheap, because it's actually very expensive. But the prepaid tax credit makes it affordable, maybe to some. And so if you don't get the prepaid tax credit because your income pushes a certain threshold, it's really expensive. What are the other opportunity sets that people have?
So the other options would be if you have a partner who works somewhere, you can always be on their plan. There are also association plans. Like there is Freelancers Union. There are specific plans, specific association for example, graphic designers, like a graphic artist guild. They offer association plans, but they're repackaged ACA plans.
Okay.
If you really look into it. But then there are also, and actually that's the plan I'm in there right now. And I wish the things were a little bit more stable in that realm that I'm going to talk about now, but they're constantly changing. You can get access to union plans. It's basically where a group gets together and provides a plan, and some of the challenges are that you have to fill out a medical questionnaire because they can deny coverage for you. And you have to go through a health insurance broker to get to those plans. They're not allowed to market them. So it's something to speak to a broker to figure out which plans they can offer. And as I said in the beginning, the landscape is always changing. Like, for example, when I had my design studio last year, we were on Aetna plan, and then at the end of the year, they send the notification that they're no longer serving New York. So, and I heard the current plan that I'm on, also they're leaving New York and will not be able to provide coverage. So I would need to look for something else. But actually, the union plans can come out even cheaper than the ACA plans without subsidies, and they offer a pretty good coverage because they're nationwide, and they often they're PPOs, so they're better plans.
Okay. And what about if somebody's leaving their job? What about something like a COBRA option. What is it? What is that?
COBRA is a great option. It can be a great option, and what a lot of people don't know is that you can leave at any time, so you can sign up. And I think most states offer COBRA for 18 months. I think in New York it's actually 36, so it's very long. And I think New York and California, as far as I remember. But the COBRA is a great option. You can enroll into it. You have like 60 days after you no longer work there. So you can enroll, for example, on day 59, and if you need medical care and you on day 59, you are there at the hospital, and you can enroll on that day, and your COBRA will be active. But what happens is that a lot of people are surprised by how much they end up paying for it, because now it's the same plan that you had when you were employed, but you're paying the whole price. Your employer doesn't cover anything.
Yeah. One of the things I've learned about COBRA too is you typically pay a little bit of an additional premium for administrative servicing, essentially, right? So
it can be 102%. Yeah.
Yeah. Typically, yeah. If you take what you're paying on your W-2, so if you grab like your W-2 from the year prior, it'll show you how much your employer actually paid for for their side of your health insurance, and you can kind of add your health insurance cost plus their health insurance cost. And that tells you what the cost of your actual health insurance was, which you will start to see is probably pretty expensive. Yeah. And then you would want to times that number by 1.02 to just add on an additional 2% premium, which is a rough estimation of probably what it's going to be for just, again, paying additional small administrative fees to be involved with the plan, even though you're not working there anymore. Right. So the last big area that you had called out, Igor, as opportunity sets for creatives or freelancers or independent contractors is actually around their own retirement planning. Tell me more about what you mean by that, and what you think the opportunity set is, and what people can do to help set themselves up for success.
Sure. And I can tell you my personal experience. When we started running the studio, our accountant said, so just do a SEP. And I was like, what? A lot of people don't know that you can actually open retirement accounts for yourself when you're an independent contractor or you have your own business. Because a lot of people who work, they just kind of happens automatically. Your 401k kicks in. Most of the time it's automatic. So SEP IRA is, I really like it because it's so easy to set up, and you can contribute quite a bit of money to it. You can contribute up to $70,000 in 2025, and usually it's 25% of your earned income. You can contribute up to that amount. So go ahead.
I was just gonna say, I think on the SEP, you got to make sure that on your, well, it depends if you're doing it on a Schedule C or out of an S-Corp, your calculation can change a little bit, and it's based upon your covered wages. So how much you decide to pay yourself, or you're paying essentially your self-employment taxes on, just as a reminder for everyone.
Yeah, and it's only employer can contribute to SEP.
Right. So, well, and that's a really nuanced thing, because you are the employer, right?
Right.
It's like you are the employee and the employer. But I would just say, like, for us, we custody all at Charles Schwab currently. And it just comes with some nuances with working around their system. So for like a long time on a SEP contribution, you actually had to mail them a check still, because it had to be checked out. It had to be from the business on a business check and go to them. There's some workarounds now. Like I know now they'll let you do those contributions out of a joint or an individual brokerage account, as long as the ownership matches up appropriately. They'll kind of help facilitate those as a internal journal entry transfer. But there's just some administrative things to be aware of. There's also some other fine points that you might just read up on, like the IRS website, on what your What are the other things you're sort of signing up for? Just like the S-Corp conversation,
Mhm.
it sometimes it can sound really simple when we get on a podcast and say, hey, great way to defer taxes off. If you're self-employed, set up a SEP. Well, it is, but also asterisk. There's some nuances that come with this stuff, and
Of course.
either get on the IRS website and look it up, read about it, or hire a good financial advisor, a good financial planner that can help you understand what it is you're signing up for, and you don't run afoul of the IRS. The same goes for individual 401ks, but there's an interesting behavioral component I want to ask you about, Igor. Because solo 401ks are adding a layer of administrative complexity.
Mhm.
They are a little bit more rigid now, even if it's just a solo, what they call solo 401k or an individual 401k, which tend to be great opportunities for people that are self-employed and have no employees, right?
Mhm.
You're allowed to have one if it's just you and a spouse,
Yeah.
right?
Yeah, that's
But
right.
if it's like you and a business partner, that's still probably a no-go.
Mhm.
That being said, when the account gets over a certain size, you got to make sure you're filing an additional tax form called a 5500. Typically, you get to do a 5500 EZ though, at least, so that's nice.
Mhm.
Um, and your other administrative duties around testing and deadlines are a little bit stricter, we'll just say.
Mhm. Yeah.
Have you found in the creatives, in the space with the creatives, that they tend to want to lean into and say, hey, I'll work around the detail. That's just such a great benefit. Or do they say, nah, give me the easier, simple thing because I already hate kind of personal finance as much as it is anyways. I want to spend less time, dealing with it administratively.
Yeah, what I found is that I actually had an experience with Schwab. I recommended to my clients to open a SEP, and they had to go to jump through a lot of hoops.
Mm-hmm.
And I was surprised because I never dealt with Schwab in that capacity, and I dealt with Vanguard, and it takes like 10 minutes to set up a SEP IRA. Um,
Well,
so
that's
to answer your question,
well, that's
I
go ahead.
sorry.
Oh, I was going to say,
Yeah.
that's getting it into Vanguard. Getting money out of Vanguard tends to be a different story, but not all
So
custodians are created equal.
yeah. So in terms of simplicity, uh, as I said, I think a lot of people don't even know that those are two options that exist, and they really need guidance in terms of what needs to happen. Uh, Simplicity always wins, I think, but there are situation. I've talked to some people who their husband and wife, they run a studio, so I would probably, if they were my clients, I would strongly recommend setting up for solo 401k because you get so much out of it in that situation. But for a lot of people, I think it's for smaller places. I think SEP probably would be the way to go, just simply for simplicity.
I think the larger income gets, in particular, the SEP, I think, becomes more compelling because at a certain point, there's a limit to how much you can put into either the SEP or the 401k. And if you're just making enough money that you can't get the added efficiency of the 401k, it may not be worth the extra headache,
Right.
right? There's maybe some other nuanced data points, but I think the biggest thing that people forget is that both of these accounts, with whichever kind of retirement plan you decide to go with, neither of them count towards your IRA contribution for the year. So
Right.
if you're under that Roth limit, for example, you could still do something like an individual 401k or SEP IRA contributions, can get that tax deferral that you're looking for to lower your tax bill in the present. But you also might be able to still fund a Roth IRA for you and a spouse.
Mhm.
And obviously, you just have to make sure you qualify for that. Your income is high enough, but not too high. But all of a sudden, you can put away a fair amount of money, and still, just as somebody has access to a 401k at work, and they've put away some retirement funds, you've done it, and you can put away tax deferred, tax free growth. Both, you can kind of grab both buckets, so to speak, and build your tax diversification. And that's an opportunity set that self-employed people, I find, have largely overlooked for whatever reason. And it's actually really sad a couple years down the road when they realize it and they go, shoot, I can't ever get that time back. But they're so used to, hey, somebody was putting money in my 401k or I was just putting money in the 401k or really wasn't thinking about it. At least they had something going on. And the other component too is a reminder, if you're self-employed, you really need to make sure that you're saving for yourself.
Yeah.
Because you're likely falling into the trap that most self-employed people are doing, which is figure out how to write everything as a business expense and, spend as much money on your business as possible to have the expenses to show that you make no money so you don't have to cut a check to the IRS.
Yeah.
And I caution people against that because at a certain point, you're spending, you're spending 30 cents, you're spending $1 to save 30 cents. Sometimes you're much better off just keeping the 70 cents, cut the check to the IRS. In particular with self-employed individuals, when you run it down that lean on taxes every single year, there is a social safety net out there for people that have not planned well for retirement. That's supposed to be, by original design, about a third of your retirement income need, and that is Social Security. All right. Now, remember, it was supposed to be a third. I have dealt with people that it is their primary retirement source of income.
Yeah.
And it is not the comfortable retirement you are hoping for right now. I promise you that. So the other 2/3 were supposed to be your pension from work, right? If you worked a union job, you worked in the factory, whatever it was, you had a pension back in the day. If some teachers still have pensions available to them, government workers, corporations largely don't have or offer pensions anymore. But the pension and then your own personal savings. So what you had saved up in, brokerage investments or maybe some IRA money after those had, come out. Obviously, they weren't around when Social Security came out. But the idea was, hey, the government would take care of a third, your employer would take care of a third, and you would take care of a third. What I see most people do is the government is taking care of a third because you're kind of forced to do it. And then they're doing a sixth, half of what they should be doing in their 401k typically, and they're doing nothing on their own. That is the most common thing that I see people doing. And when they go to being independent, right, and they leave that corporate job, they're working for themselves. Not only are they not doing the 2/3 they were supposed to be kind of doing when they were working, or the 1/6 that they were even likely to do. Now they aren't doing the 1/6 at all.
1/6, yeah.
And they're kind of taking the government's 1/3 out of it as well. You're literally left with, there's nothing, right? So if you're not doing something for yourself for retirement as a self-employed individual, you just know now you're probably going to be in for a really rude awakening down the road.
Yeah. Start small. You got to do it. Just wanted to mention one caveat about those SAP and solo. Well, no, actually, sorry, just SAP is that if somebody wants to do post-tax backdoor Roth conversions, they count when the pro-rata rules.
Yeah, pro-rata rules.
Yeah. They kick in, so something to be aware of.
Definitely something to be aware of. But one of the things that can help is that if you're doing conversions, at least you're getting the tax deduction going in, right? And so just be aware of that. It all depends on your tax bracket and your total net worth statement. But the pro rata rule does absolutely suck if you trigger it. Your accountant will charge you a little bit more every year to file your 8606 and track it. If you learn how the math on that works in the long term, you'll be wanting to probably avoid that. So sometimes if you are the aggressive saver that's trying to backdoor Roth, you have high enough income that you're phase out on your Roth contributions, and you're eligible for a solo 401k, that might be the thing that makes the little bit of an additional administrative lift really worth it. So something to consider. Great call out. Hey, it's no secret to us. We look at the demographics of this show. We know that a lot of you listening are actually other financial professionals and other investment advisors. We want to go ahead and invite you. If you're looking to do something different in your career, go ahead and reach out. We're always looking to bring on high quality people that understand how to do the planning process, align with our values, and are looking to deliver high value to their clients. Please just go ahead and reach out to us. You can get us on our website, ducharmewealth.com, and we look forward to talking to you. Anything else you want to add that's just a little tip or trick that you think can help self-employed individuals really just set themselves up for success either in the here and now or in the long term?
A couple of things, quick things that I can mention. One of them is I always say try to find a good tax preparer or a CPA because some creative professionals try to do it alone with tax preparation software, and it just, when you have a business, it becomes more complex, and just it's better to have a professional on your side to do that work. And also another thing, going back to the income, just maybe a friend of mine recommended when I opened my studio, a friend of mine recommended just going to the bank and opening a business loan account. Just, you probably won't need to use it and the rates are pretty high, but it just maybe for a peace of mind that there is something that you can tap into if you really must.
Interesting. I haven't heard that before. And I'd always have to say, like, be careful of the temptation to use lines of credit like debit.
Yeah, you need discipline for sure.
You got to remember to have some discipline around that. It's not something you want to carry a balance on. So anyways, I think that's it's some decent tips. Taxes do get a lot more nuance when you're self-employed, and having a good accountant in your corner can make all the difference. So I'm a big fan of that for sure. Well, hey, I appreciate you taking the time, Igor, hopping on, doing an episode for creatives and independent contractors, freelancers, gig workers, whatever you want to call them these days. The people that have found that, they don't fit the corporate mold. And I think that's a growing segment of the population. I think they still, they not only probably need help and guidance, they probably need more than the average person. They need it. They've got a bigger need for it. So, probably some of the most underserved people, because they tend to not have a lot of assets to manage or a lot of cash flow to invest right away. So a lot of your traditional shops typically don't do much to serve them. And it's always fun that, you and I both have the capacity to lean in with those people and try to get them the help that they need, get them going in the right direction.
Yeah.
So,
and my offer for help with the website stands if you need.
Oh yeah. Have you helped me with my website a little bit? Yeah. My website can always use a little work. It's come great lengths to anyone that has known me for a while, but, things can always get better. Right. So, as I said in the beginning, I am not a design person at all. I don't know how to do marketing. I don't know how to do graphic design. I don't know what looks good or not. My wife reminds me all the time, anyways, but I might pick your brain on a couple ideas I have though. So thank you for that, Igor.
Sounds good.
Okay. Take care, my friend. We'll see you out there.